like whack-a-mole. You know, it's like
Well, we agree to pay a lot of money. I'm paying $1,700 to move trucks to Austin or something,
yeah,
which is like 100 miles, dude. I'm just
yeah.
paying ridiculous amounts of money to move this freight, and it still doesn't move.
Well,
It's
yeah, and it's just like you said. I mean, it's just frustrating because it goes from like you take care of a problem, and then next thing you know, you got another one, right?
yeah, I I'm running into vacation mode here. Unfortunately, I can't take a vacation because the market needs to be, you have to pay attention to what's going on right now.
Yep, yep,
You can't
absolutely.
just walk away from issues in a market like this where it can cost you credibility or money.
Yep. Well, I mean, yeah, and I think on the truck side, like my deal is I'm just like, hey, what find the price that it takes to move stuff, and then figure that on a go forward basis, and it is what it is. What it is. I just filled up my car for I don't drive that much, but it was $95. I mean,
You're
like,
lucky.
and
My, I got a Yukon XL. It cost $130 to fill that thing up.
yeah, yeah, there you go. Exactly.
We're at $5 a gallon here, pretty much all over Portland. It's $5 a gallon.
Yeah, I think it was
28 gallons or 27 gallons times 5. Yeah, it's going to cost me $135 to fill up tomorrow when I go get gas.
something's gonna have to give, brother. Something's gonna have to give.
We're going to go higher. I mean, food prices are going higher, gas prices are going higher. I mean, just everything's going higher. We're not done with inflation yet.
Could you hear me okay, Matt? I can hear you.
Hey, welcome.
I want to make sure my headset's working. Is that okay?
Tim Hansen's asking questions already. I guess we're already on. So hey, Tim, to answer your question, am I profitable at $1,700 for 200-mile deliveries? No. I mean, you can add that to the cost of your wood, but you're definitely it doesn't help you be competitive. And the bigger problem for me isn't the price that I'm having to pay for the trucks. It's the performance of the truckers themselves once you agree to book the trucks. That's where the problems come in, because they may or may not follow what they said they would do, and that's where you get in trouble.
Yeah.
It's called they tender them now, which basically means if we can cover them in a month after we take them for you at a profitable, we will. Otherwise, you won't hear from us again.
Yeah.
Would you say a free option?
Yeah, I love this whole tendering thing in the industry and all these trucking companies that have got all this technology now, yet they still don't pick up loads as well as they did in like 1995.
Nothing more challenging than having to rebook the same load multiple times,
Mm-hmm.
and to your point, Matt, built a business on credibility of saying, hey, yeah, that load, it's going to load tomorrow, it's going to load today, it's going to load tomorrow, and then having to go back and go, well, no, that didn't happen. I hate that.
Yeah, I just refuse to do it. So basically, if you're listening and you care about my plight, and I mean, I'm a buyer here. I buy thousands of cars and trucks of lumber every year, and I'm just going to refuse to do that going forward. So you can just eliminate your market share based on the results that I'm seeing. So my answer to the problem is don't do it again.
I don't know what's worse, trying to book trucks or watching Nicholas Sparks movies.
I don't even know who that is.
You don't have to.
I don't want to talk about stuff that's making me upset. Let's talk about something good.
Well, look, let's introduce us all here. I'm going to pull up one other thing. There's lots to talk to about today, gentlemen, ladies and gentlemen. We've got a lot of good stuff going on. Let me pull up my link here.
Ash, I want to let you know that Charles was a little upset that I wasn't wearing a collared shirt last week, so I just want to know, I feel like I tried to really up my game this week and look a little sharper for him. I hope he appreciates it.
I'm trying to pull up the live LinkedIn feed, but it's not showing on my LinkedIn. I just wanted to. That's where I actually answer questions and it is not pulling it up. Let's try it one more time. Just if you guys got two screens, Greg and Matt, if you pull up your live LinkedIn feed and you can actually answer questions on there if it's actually working. Let's see here. No, my live stream is not working on my LinkedIn yet. So let's just go from there. So welcome to This Week in Lumber with Matt Beamer from Hampton Lumber Sales, Greg Riley from Sitka USA, where we dissect the week prior to us and what's going into this week. Again, all of our opinions and ideas are our own. Please keep your hands and legs inside the ride at all times and don't take any of advice from us, because we make and lose money just like anybody else. So interesting.
Are we going to have to start putting up, our conflicts of interest on the side, or are we just like, check all the boxes?
Yeah, it's just the check all box that's located somewhere. So had an interesting conversation with a really smart guy last night. I said, "How's the market?" And he said, "It's the first time that the buyers, if this was a war, the buyers have finally taken over control." And Matt, talking to you, you had a good point yesterday. Up until last week, price was one negotiating point, tally was one negotiating point, and ship time was another negotiating point. Where do you have to be on? And you could, a buyer would usually be able to go negotiate one of those. Where do you think we're at today on that?
Yes.
Yeah. So you almost got to hit.
Yes.
You almost have to
open your ears and let them dictate, and then if you think that's reasonable, then you say yes, and if not, then you say no, and you just move on. But right now, it's what you call like guerrilla marketing. So and the good news is like we've all been through markets where things slow down. It becomes a little bit more difficult to sell lumber. It's the natural ebb and flow of a commodity. This isn't unusual. This happens. This happens several times a year. Like the comment I made to one of my really good customers, I said, how you were calling me a month ago when you wanted me to sell you lumber that we didn't have on a list? I said, well, now I'm calling you to sell you lumber that we do have on a list. So, just the roles have changed. The pressure has gone from the buyer to keep up with the demand to now the mills have pressure on them to keep up with sales. So that's the change.
Yeah, I thought that was astute, Matt, though, saying that, and that makes a lot of sense. Kind of going through the mill's earnings, listening to some calls from Q1, and reading a couple things. I think Dustin from Random had a really good comments on that. It looks like there's been some inventory build at some of the mills over the first quarter, and there's still a frustration from a lot of people I'm seeing on social media where they're saying, "Hey, I'm just getting a car now from March." And Matt, you live in that world more than I do on the West. Is that true? Or can you, I mean, I've heard that from multiple people now that there's still some stuff that's kind of laggy a little bit, right?
Yeah, I don't see that. The CN and the BN are the main drivers of I guess, delays from the West. And I don't really feel like it's gotten any better. That in a normal year, like even last year, it seemed like in May and June, the shipments finally did get better, but maybe this is going to be the first year where they don't improve in the summertime. But what's happening also is we talked many times about demand destruction. And so eventually you just won't have as many shipments to manage. I mean, it really, that's how the problem gets solved, right? Greg talks about this repeatedly. High prices solve high prices. Eventually, high prices destroy demand. And so, we're going through that process now where maybe the CN and the BN won't need to worry about shipping as much forest products, rail cars in the future because there just won't be as many of them being moved.
Well, and look at you. It's hard. We're going to jump a few things here, but the economic outlook, up until 3 or 4 weeks ago, I guess everybody optimistically is still positive on housing. But when your Fed is trying to slow things down, and all the results of that, stocks, interest rates, all of that, I would have to think at some point, Matt, that is exactly what happens. You're seeing trucking get freed up in many places. I'm on the different websites and the social media of all the brokerage houses and trucking. Gas is still up, but there's freight lanes are absolutely opening up, and I don't think anybody can argue that point. Are there still some tight ones that some people are going to comment? I'm still having a tough time with trucking, yes, but I think overall, or if you're shipping out off the port into Texas, but overall, I think most rates are pretty much opened up. Matt, Greg, does that make sense?
Yeah, I mean, what I've certainly seen that. Some rates in a lot of lanes have backed off a little bit, and but certainly the availability has improved as it has improved considerably. I guess I'll just go back to one point. Is you talked about Mills' first quarter earnings and the inventory build. Obviously,
I think that's what I read. Did I read into that right or not? Am I wrong? Yeah.
Well, no, and obviously, if and you're talking about Canadian spruce mills. Hey, if you're not getting the rail car service to be able to ship production, you're going to build dressed inventory, and for the most part, that's what's happened. And I've been saying all along is if I look at the spruce market has been held artificially high for the last, I'm going to say, 60 days because of the shipping issue. And I mean, and the constant thought is, where would the price be if all the mills were prompt?
Of spruce.
Correct. So I mean, we currently have futures as a price determining mechanism, and we saw May go off on Friday, and there was lots of comment as how it could fall $84 in a day, and it's because that was kind of reflecting the realistic price for the product in that ship time. You've currently got May at 700 and 749. I mean, you have July at 749. So, if shipping clears up over the next 60 days, is 749 a value for cars of lumber in July?
So where would the price be if everything was prompt right now? What's your best guess?
$550, $600.
Matt, what do you think?
I mean, he's right. We've been the beneficiaries of artificially high prices here for quite a while. I mean, we had a huge run last year. We had another huge run this year. And you could joke and say that my job has been to short the CN, like basically if I just look as a trader, I just make money when the CN and the BN don't do their job correctly because I have inventory that can ship. And so that's going to go away because the ports are getting filled back up. The trucking's loosening up a little bit. Eventually the rail car situation will resolve itself. The big issue there is they need more workers. They need more power. They just need more everything. But the other side of that would be, what if we ship less lumber, right? What if we ship less oil? What if we ship less wheat? What if we ship less coal? Those railroads aren't going to be as crammed full of traffic as they have been the last 2 years, right? We'll see that happen also. So, that's where I'm at right now. We are actually just sort of starting the process of unwinding what would be an artificially high price for a commodity that has a long-term price average of around 450, 500.
Yeah, that's a great. And so let's look at the other thing happening on the other end of the chain. Talking to buyers of lumber, which I do every day, at both the distribution level and the retail level, are also in the process of running less days of inventory. I don't think we can argue that the distribution tallies are down. One, because one is because of logistical problems, but two, because nobody wants to have 4-digit wood sitting on the ground because they knew what happened to them at one point when they did that before. So on the flip side of it is we probably have some bounce coming at some point when people decide to top some inventory off because They're not buying right now. Is that makes Greg? Is that am I wrong? Am I wrong on that?
I disagree with that, Ash. I mean,
Okay.
the flow of orders every day is really, is really, really good. I mean, there still is a good level of liquidity that I've seen, right up until this morning, anyhow. I won't say for today so far.
No, good point.
This
Yeah.
morning,
Yeah.
it's been really good. And part of the thing is, I mean, the 2 points is, one is, and we can talk about, I guess we're going to talk about housing starts because there's some great information in that report that came out this morning. But customers are still really, really busy. Their business is really, really good. And they can't, a guy that you and I worked with that worked for us for a long time, Ash, he left and he went to work retail. And I'll never forget the first thing he told me. He goes, Greg, all those years, we were like, price and tally. He goes, you know what? Number one job, do not run out. Everything else is second, third, and fourth to that. That's number one. And so, with the supply chain issues that we have, I mean, the retailers have to keep buying. They can't take a step away because they're going to run out, and the availability of quick trucks and distribution, what you need, isn't there right now.
I guess there doesn't seem to be much in the middle, not much buffer stock, where when we had this conversation 6 months ago, if I remember right, we were saying, hey, a lot of people are buying, and some of the same guy we were talking about here, Greg, they weren't buying from the mills. They were buying truckloads because there was wood all around them. I don't think that there's that issue anymore. Matt, you could speak to that. I mean, how much wood is sitting on the ground down in the markets that you trade in right now?
I mean, there's always more than you want when the market starts to soften up, but
sure,
in the big picture, there's very little. Really, if you analyze wholesale holdings or secondary offerings, there really isn't a lot of depth to it. As you stated at the beginning of this, people feared high prices, they feared logistical problems, and that the time of year also is a warning. And I think people have learned through the recent history that maybe carrying a bunch of $1,400 lumber into June, July, August isn't the greatest way to make money in the summer. So that all leads to low secondary and distribution inventories. And so I think it's manageable, right? I think you'll see a real manageable and orderly. What little wood is out there for sale will get sold at the price that it needs to be sold at. But then once it's sold, it'll be gone. There won't be a whole bunch more behind it, which I guess if you think about it as like a rope, the rope is pulled tight. There's not a lot of slack in the rope, right? The market is basically the retail customer needs the wood because they're super busy. And then the mills have a bunch of wood stacked up because they haven't been able to load cars very well. And there really isn't much in between. There's a little bit of wood. I've got a few trucks. Greg's got a few trucks. All the other wholesale guys out there with any game, they've got a few trucks. The national distributors, they've got really small and manageable inventories, so that the customer ultimately is responsible for this market, going up or down, because they're gonna be responding to that. Does that make? I'm kind of talking in circles here, but you know what I'm saying. I'm getting long-winded.
You sound a little bit like Kamala right now, Matt.
Yeah, I know I'm losing my thought here, but the bottom line is there isn't a lot of unsold wholesale wood out there for people to feast on.
There you go.
So let's up. So Matt, Greg, and I were chatting this morning about. Obviously the big thing today is new residential construction. So let's bring up this report, if we can, that shows the monthly new residential construction for April, which will show two things. One, that's the completions. Let's go to the new residential construction. I think I sent over about 20 minutes ago. This one here, Jory, if you got it, that shows the actual. New residential construction, April 2022. So building permits are 1.8, housing starts 1.7, housing completions 1.295. And if we've got that residential construction completions chart, maybe I can just bring it up here. Can you guys see any of this? Hold on a second. Let's see if I can bring this up here.
So actually, one of the numbers that was interesting is, year to date, housing starts are up 10%.
Yeah.
But from a year ago, single families only up 3.7, multifamily is up 40%.
Can you see this? I'm trying to share. I'm trying to share this one. Let's let me try to share this setting. If it doesn't work, not a big deal. Otherwise, I'm gonna have to do it the old-fashioned way.
So, Greg, that's for April, or that's for the year to date?
For May. No, I was saying is for year.
There we go. Okay. Yeah. So if we pull this in and we look at new residential construction, this is the big thing, and then we'll go over to the other chart that Jory pulled up, because this got me talking. So this completion rate has been about the same since this chart's been up here, about 1.2 to 1.3. Does that make sense, Greg, Matt? We can all agree with that, right?
Yeah, I mean, you can see that green line is really pretty steady and has been for the last 5 years. Maybe it's ticked up marginally in the last couple of years. During the same time, we've seen the permit and start number, that spread move out. You see how closely those were together for 17, 18, 19, and into 20. And that just brings up for me. So the two things is the houses under construction right now. It's 1.635 million houses under construction. That's up 24% from a year ago. So from a year ago today, there's 24% more houses under construction now than there was a year ago. And at the current completion rate, 16 months to complete.
So basically that tells you, Greg, that they're having trouble wrapping up the completion process in the same timely manner as they did maybe 3 years ago.
It's been
that got us, Ash. That got us talking, and Greg then sent over, and Jory, if you wouldn't mind throwing up the first chart that you had up, the units completed, because my first question to Greg was, okay, let's go back to 2004, 2005. I would think, almost 20 years later, we would have the capacity and the ability to build as many homes, if not more, than we did in 2004, 2005. So Greg said, Ash, let me check, and let's look at this. So we pulled up this chart that shows completions, total units completed, multifamily, single family, right? So look at back in 2005 and 6, we were completing over 2 million homes in that time frame, right? All of a sudden, we devastate the actual production chain, I will say, and the whole distribution chain of lumber when we go through that crisis in housing, you can arguably say till 2010. Destroy trust building plants, everything. So all of a sudden, we're down to 600,000-ish, 500 something. We come back, we cannot get over this 1.2, 1.3 completion. And why is that? Is that purely COVID? Is it supply chain? Is it what is the reason that that gap just keeps opening up something? So Greg, what is happening? What do you think is going to give?
Well, when we pulled this up, the thing that really surprised me is barely above what used to be the low end on this chart. I see all these spikes.
Yes.
and the low end completion rate, we're marginally above, we're a little bit above that low end. So I mean, I think, hey, we know cycle times have increased for the builders, and whether it's, I think it's an all of the above. It has to do with availability of labor, availability of certain products that just stretch that whole cycle time to complete projects out. And I mean,
why in 2022 can't we build the same houses we built in 2005? And one of the things you pointed out too, though, the difference between single family and multifamily in 2005 versus now, right?
Right. The spread is disproportionate that between the single family completions are closer to the '05 high than the real pipeline is the real big kink in that pipeline is the multifamily. But the other, the other number that I keep looking at, and so my contention has been and continues to be that next month, the month after, somewhere in the next 60 to 90 days, we're going to see a really sharp drop in housing starts and permits. The big builders are going to focus more on completions and focus less on new starts because the pipeline's so great. That having been said, it's not like we're going to have a huge collapse, because the other number that's big is the number of houses that are authorized but not okay. So that's the permit, not the completions number. The under construction are the ones started but not completed. Well, the authorized not started is permitted not started, and that's up 15.8%, highest that it's ever been since they recorded that number. So that says, in addition to a lot of stuff in the pipeline under construction, there's a lot of stuff behind, authorized, ready to go. So multifamily is going to continue to be very strong relative to single family on a go forward basis for this reason. With mortgage rates going up, we're pricing people out of the market. We're turning those people that would be buyers into renters. And with rents, rents are rising also, but it's a little bit easier to pay the higher the money in rent than it is to qualify for the mortgage.
So that would mean investors should still be aggressive as buying properties if they know that there's going to be rent out there, right? Or if that's
everybody needs a place to live, Ashley. Yeah. Everybody needs, and the last time I checked, I was, I fired on the channel that shows, the stream of people going across the river every day. There's a channel that you can turn and they just show you a picture of people walking across the river every day.
Yeah, no, it is true, and everybody's got to live somewhere. So if 2 million people come across, they've got to fit in. They've got to live at some location, right?
One of the reasons it's funny that chart shows that we're back to 1970. So we've gone from, in 2005, 2.2 million housing starts and completions to 1970 at 1.4. Well, we've been joking about this for like a year now. We knew that we were capped on starts, right? There's just only so many people that are working in the sector to do the work, right? Like, you need framers, you need land, you need crews, you need material. Well, land's expensive. So, the guys that got crushed in 2008, 9, 10, 11, they've probably been a little wiser in how they spend their money going forward, a little less like drunk sailor-ish going out there and just buying up all the property. I think they're being more selective about where they want to build and what they want to build. The cost of entry into the housing game for a builder, it's expensive. And then on top of it being expensive on the front end, to go buy the land, you got to deal with red tape. You got to deal with the government. You got to go get all your crews there. And then you got to deal with all the logistics of getting the material there. So it's just the process for building a home is just so much more complicated and more expensive. I think it makes sense that your completions are down, right? I think honestly, it makes some sense. And it makes some sense that we require people to come up with 20% of the money down to buy a house. Like what was happening in 2005, where people were just buying houses and renting them out, like free money, that was unsustainable. This system that we have now is probably a lot more sane long term than what we had 20 years ago. So,
no, that's a good point. I'm also looking on this the completions chart that you gave me, Greg. So it looks like 1990 was the bottom of this first market, and it basically moved up for 15 years. And so now this cycle, we've gone from 2009 basically to 2022. We're 13 years into this basically cycle off the bottom, 12 to 13. So it's just interesting how long it takes to build something back up after.
So we've only built 2 million houses. I think three times in history, right?
The 70s,
79,
like 74,
90,
70.
79, right?
Well, it says, so I'm looking at 74.
Yep.
It touched it in 79. Never quite made it back in 86, 87, and then touched it again in 2005, 6.
Right. So yeah, I'm just gonna say we get back to 2 million houses again. I'm gonna retire. That's people say, hey, when are you gonna get out of the business, Greg? Come on, move along. And that's Greg, it. Next time we hit 2 million, I'm out. I'm done.
We might not make it to 2 million ever again. You might
I don't know.
Die at your desk.
Not if completions stay at 1.3.
Now you may want to hedge yourself and say if building permits hit 2 million.
That's funny.
All right, guys. Well, look, that was a good show. I appreciate it. If you want to get a hold of Matt, it's Matt Beamers at Hampton Lumber Sales out in Portland, Oregon. There's his email. Greg Riley's at Sitka USA. We'll get together next week. Tomorrow, Matt and I, Lehman and I, will talk about lunch with lumbermen. We'll chat more about all the different markets and Matt's different perspective on things. And then Friday, we'll do the smart market. Greg, I'll see you up in Montreal next week. Matt, you're not going to Montreal?
Are we going to do a live show from Montreal, Ash?
We are. Wednesday's the last day, and they close at 2, so 2 Eastern time. So we'll just be up against it and be able to close it down when everybody's walking by the booths next Wednesday.
We'll have to recruit. We've got some good people we can recruit to come, sit in and talk with us. Let's, we'll get a little. Maybe we'll have set up like The View.
Yeah, and one more thing, mxlumber.com, where we are the premier digital B2B exchange, moving lumber panels and OSB in a digital market where you can come in, buy, sell, dynamically bid and offer on the market all over North America. European spruce, everything. Sold European spruce this morning. We'd love to have you on. It's free to get on the platform. Come to mxlumber.com and we'll get you set up on a demo and the credentials, and you'll be on buying and selling tomorrow. So
I'll work on some of your stuff you got down there in Houston, Matt. I'll let you know if I can do any good.
Thanks. All right, buddy.
All right, see you guys.
All right, guys. Thank you so much.
Yes. Thank you.